What if $10 a day, money that you're probably spending on something, could turn into $500,000 in your retirement? This is not a get-rich-quick scheme. In fact, it's the opposite. A boring but proven strategy recommended by Warren Buffett and Jack Bogle for decades, the S&P 500. I'm going to show you exactly how $10 a day can turn into $500,000 over 30 years. And you don't have to be a stock market genius or a day trader to do this. Let's begin. Part 1, the problem. Let me ask you this. Where is your money right now? If you're like most people, it's lying in the checking or the savings account, where you feel it's safe, right? What if I were to tell you it isn't safe? There's a thief coming in every night, stealing a little bit from your account. Even though the balance stays the same, you're getting poorer day by day. The name of this thief is inflation. What this causes is price increases in products around you every year. That bag of chips has a lot more air in it. The chocolate bar is thinner. And the juice that was 64 ounces is now 52. Welcome to the world of shrinkflation. You're paying the same price, but getting less. Let's see with some real numbers. The historical 10-year average for savings rate in the US is about 0.5%, while the rate of inflation is about 3%. Imagine your savings account is like a leaky bucket. You put in 0.5% and it's draining 3%. Where are you going to win over there? We can look at it with real money. $10,000 in your savings account over a year gives you $50 in interest, but your purchasing power is now $9,700. Why? Because of 3% inflation. You didn't make $50, you lost $250. And this gets worse. If you do this for 5 years, you end up having $10,253, which sounds great, but what you don't realize is you lost the purchasing power of about $1,500. And while your money is dying in this way, there are people just like you paying the same kind of bills, but making one decision to put into the S&P 500, which has an historical rate of return of about 10%. The result, in 5 years, they end up having more than $16,000. Same time point, same 5 years, same amount, one decision, and the difference is more than $6,000. But they are not smarter than you. They simply understood something that changes everything. And that's what we're going to talk about in the next part. So here's a question for you. Option A, you get $1 million tax-free right now. Or option B, you get a penny a day that doubles every day for 30 days. What are you going to pick? I'll be honest here. The question looks like a setup and most of you might have chosen option B. And that's correct. But the question is, why? Let's look at the numbers. If you keep on compounding, day 10 looks like $5. And day 20 looks like $5,000. But here's where the magic starts. This boring $5,000 in this 10 days becomes more than $5 million. The penny destroys the $1 million if you wait it long enough. This is how the money compounding works in the S&P 500 over the long term. $1,000 in the S&P 500 at 10% return, and then end of year 1 gives you $1,100. But at year 2, you don't get interest on the $1,000. You get interest on $1,100. And you end up with $1,210. Your money makes money, and that money also makes its money. And this is the compounding magic. Now imagine, you're not just investing once. You're adding $10 every single day. Every $10 compounds over time. This is dollar cost averaging. You're not timing the market. You're consistently showing up and letting the compounding do its magic. Let's see in real numbers. $10 a day for 30 years gives you $592,000. If you let it run for 5 more years, you end up with nearly $1 million. And if you do it for 40 years, it's $1.6 million. In fact, in the 40th year alone, you end up making $160,000. That's more than someone working full-time for the whole year. And this happens while you are sleeping on automation. And now, it can become even easier if you just increase by only $1. So the year 1 is $10 a day, year 2 is $11 a day, year 3, $12, and so on. Year 30 is $39 a day. The result, $1.1 million. Same period, just increasing small $1 as your income increases every year. But, and this is a big but, compounding takes time. That $10 a day in 30 years, what if you waited for 5 years? Now you're compounding only for 25 years and you end up with $354,000. Waiting 5 years costs you $238,000. That's not meant to make you feel bad. It's meant to make you start now, today, not next month. This is why putting the money into the S&P 500 rather than the savings account isn't just a good idea. It's the difference between two completely different lives. Now that we know about the power of compounding, let's talk about what to invest in. Years ago, when I was at that crossroads, I used to get overwhelmed with all the choices. But now I'm gonna make it incredibly simple for you. So what is this S&P 500? It's a list of the 500 largest, most successful companies in America. Companies like Apple, Microsoft, Nvidia, Coca-Cola, Johnson & Johnson. An S&P 500 index fund owns all 500 of those companies in one package, the big ones. You're not picking stocks, you're buying the entire American economy. But why does this S&P 500 work? Well, it has been around since 1957, more than 70 years. And the committee has been constantly updating and improving based on a very strict criteria. This is why the index always self-corrects itself. It has a very strict criteria. Only if you're good enough, you get in. And similarly, if you go bad, like Enron in 2001 or WorldCom in 2002, you get kicked out. You're not betting on one company. You're betting on a system that selects the best 500 companies and puts them on the index. Now, there are two main ways to buy it: the traditional index fund or an ETF, an exchange traded fund. The traditional index fund often requires $1,000 or $3,000 minimum to start, but an ETF, you could start with maybe even $1 in some cases. You buy VOO or VTI. The VOO tracks the S&P 500 and the VTI tracks the entire US stock market exchange. And surprisingly, both have very similar performances over the long term. So you can pick either of that. Now, don't be confused by VOO and VTI. These symbols belong to specifically Vanguard, which is a fund house, and their ETF. You can find the same in Fidelity, Charles Schwab, BlackRock, and others. In fact, in the description below, there is a link to grab a free comparison guide. It shows you the top S&P 500 ETFs, what to look for in your 401k and 529 plans for college savings. Just click the link and I will send it over. Remember, all of these S&P 500 ETFs are good as long as the expense ratio is under 0.1%. Keep in mind, the expense ratio is the fees that I'm talking about. Fees are what your fund charges you for managing it or for holding it for you or for doing all this investment and growth and so on. So let's say you invest $10 a day for 30 years. That's about $109,500 that you put in. With the S&P 500 index fund, a 10% return, you have a 0.03% fee. That's what typically an ETF like VOO charges. And you end up with $680,000. Now, here's the interesting part. If your fund has a 1% fee, same performance, you end up with $500,000. You lost $180,000 in that 1% fee over a 30-year period. And this is one of the secrets for the success for the index fund. And that's what Bogle taught me, that every dollar you pay in your fees is your dollar you take away from your compounding machine. And you know how powerful the compounding is. Now, how do you get started? What do I actually do? How do I automate this? The most important part. Well, we're going to talk about that in the next section. But before that, I really appreciate a like so that this video can be discovered by more people if you find value in this video. Just a word of advice. You're welcome to choose any fund house that you want. I have opened an account with Vanguard for more than 20 years now. It's important to get started and to make sure you choose the right fund. Of course, if you choose other fund house, they may not have the VOO, but they may have some other symbol for the same S&P 500. You can sign up with that link that I mentioned before, and I'll try to cover some other names or popular symbols for the S&P 500 that people use. All right, we open the account and then open an investment account, open a new account, open an investment account. And then here, just remember, we need to be having a permanent US residence and an SSN number. That's important. So if you have those, you can continue. You select your account Now here there are a bunch of different options. So what we are doing over here today is going to be individual brokerage. You can of course do a joint brokerage as well, where your partner or with your spouse, and you can do it together. But today we are going to do here individual brokerage. And once you're here, it's pretty straightforward. Your name, details, date of birth, SSN. If you're doing a joint, it's together. And that's it. Your account is ready for you. Now there will be a question of adding your bank account. So we're going to do that. We're going to do profiles and settings. And then here, choose bank information. Then add your bank info. Continue. And then just hit continue here. Now, if you have a popular bank, so for example, Capital One is a popular bank and it shows up. If it doesn't show up here, you can link the bank manually. It's same adding your checking account, routing numbers, and other details there. And it does 2 micro deposits of few cents. And once you verify those deposits, you are good to go. You can always call customer support for help if you run into trouble. Okay, so once it's done, you're on the dashboard. We're ready for the recurring transactions. So we pick recurring transactions here. Okay, we choose Vanguard ETF. And now we select the account that we just set up, the brokerage account. Now if you notice, there is no other options here. There are no Vanguard ETF, that's what it says. So here for the first time, we need to manually select the ETF and do a purchase. So we're gonna do that here. Just click on this link. And now you'll see a bunch of different options. Actually, there are more than 300 options, but we'll narrow it down. It's pretty straightforward once you figure it out. So we pick ETF over here. Index. Asset class is going to be stocks. And then in there again, we're going to do large cap. If you see up the results, it has gone down. And I'm going to pick region US. Now we are 17 options and we are going to scroll down alphabetically. And we have the VOO here. We are going to do a buy. Now here again, the same thing. We select the brokerage account. But the interesting thing here is now we can even do as low as $1. Okay, that's the beauty of this. So we pick here dollar amount and then $1. And we are gonna do it at the market rate, just simple. So here if you see, just to review your order, just to give you information, we have the brokerage account and now we are picking VOO, which is the S&P 500. And if you see the shares, it's just 0.0016 because the actual price of the ETF is more than $600. And we are just doing $1, so we can still buy it. And that's the beauty of it. So we are gonna submit the order here. And that's it. It's done. We have purchased our first ETF of VOO. Now we are ready for the recurring transactions. So we can do it from there or on the top, there is a transact options. And here we choose the recurring transaction. Again, same Vanguard ETF. We select the brokerage account. And now, let's say we wanted to set it up starting from Monday, right? So there's a little bit of a workaround here. So let's say we pick Monday. Now, if you see here, there is only weekly as low as there is no daily. So we are going to do daily for Monday. And we're going to pick $10 now because that's what this video is about, $10 a day. So this sets up for $10 every Monday. And here, use the bank account on file. This is the bank account that we just added. And that's it. You just hit now the preview order And you can review the information over here once again. If you want to, it's a good idea to check it. And that's it. Now, we set it up for Monday. Same thing we can do now for Tuesday. So I'll just show you one more with the Tuesday to get you an idea. And then a few other bonus tips. Same way, we choose the recurring Vanguard. And then we pick here Tuesday. Everything else stays the same. We put $10. And now we have Tuesday recurring setup completed. Repeat that for all other days now. Now here's something interesting. Let's say you had more money available or you wanted to increase it now. Here's a way to do that. If you go back here, we can edit it, that $10 transaction for any day, and we can change it to 15 now. And the recurring transaction is now updated. Pretty simple. Helps you keep on increasing with time, investing more for yourself. And if you think that every day $10 is too much in your bank account, you can even do the whole thing once a month, right? Or twice a month. So in this case, if you were to do once a month, so $10 a day is about $300, and we do it from first of each month. So here, 300, and now we have the recurring transaction ready for $300 on the first of each month. And that's it. One pro tip, forward this to 10 other people that you care about, and you'll have partners to do this together. That's what I did. And 3 of us friends have been doing it, supporting each other since 2007. It has been a lot of fun. Oh, and one more thing. Remember that $10 a day that gets you more than $500,000 in retirement? What if you could do that tax-free? That's correct. You can do that by opening a Roth IRA and setting this whole thing within the Roth IRA structure. If you're trying to save for kids' college, open a college 529 account. Same strategy and a lot of tax advantages. If you're struggling with credit card debt or not having an emergency fund, you can check out my video below. If you found value in this video, I would really appreciate a like. Open the brokerage account today. Your future self will thank you. That's it. Be patient, keep at it, and I'll see you on the other side.